Awesome, everyone. Hi, my name's Louis again. Today, we're going to be going back to the basics and really focusing on creating raving fans by focusing on the fundamentals of the planning process. To give any idea of the topics we're going to cover, I'm first going to touch a little bit on my background, where I come from, what was my life before starting Hubly, and I'm going to be going over what I believe is the core value of financial planning. And then I'm going to be talking about some of the trends shaping the future of this industry. And then lastly, we're going to get into the meat and potatoes and really cover the fundamentals of the planning process. I hope the topics that I share today is going to give you guys insights into what we've learned by working with over hundreds of advisors and their support teams and helping them really create workflows that help them set themselves apart from the competition and really deliver an amazing client experience. So with that being said, a little background on myself. Prior to co-founding Hubly, I actually worked in the robo-advisory space. And essentially in my role there, I helped build and design technology that brought efficiency, automation to investment advice. Back then, I was honestly young and naive, and I really did believe that robo-advisors were the future. But the longer and longer I worked there, I quickly started to realize that you really can't code away that human element of financial advice. And the one thing that I really learned is that no matter how much automation we implemented at the robo-advisors, every single client always wanted to talk to a human. And it always came back to that. They wanted more human contact, and it was almost near impossible to code that away. And this is really when the seed was planted for me, and I became obsessed with the future of financial advice. And that's when I started the journey with my team and trying to figure out if we can't eliminate the human advisor from helping people make good financial decisions, then how is the role of that advisor going to change to really differentiate your services into the future? And so what my team did about 3 years ago now is we decided, okay, well, let's go learn as to what are the client expectations? What are customers expecting from their financial advisors? And we actually went door-to-door knocking. We interviewed hundreds and hundreds of families with really the purpose of trying to understand how they approach making the most difficult financial decisions in their lives. Through this process, we had people cry, break down, shut doors in our face, you name it. It was an interesting part of Hubly's journey, but we actually learned, I think, the core fundamental value of financial planning. And simply put, your differentiation as a human advisor is your ability to help with human validation and really help clients make those fundamental decisions that are difficult to make. And I remember this concept of human validation because it actually ties into a lot of the fundamentals that I'll be talking about when I get into the fundamentals of the planning process. And so this idea of human validation has really been cemented at the core of Hubly's mission. And it's something that we always revisit when we're trying to figure out how to build out technology is how can we help advisors provide this? And so since human validation is really rooted in the core value of financial planning, we started looking at the industry trends shaping the future. And we asked ourselves is, if this is the core value of financial planning, how can advisors actually leverage that to acquire and retain clients and ultimately compete in the long run? And so when we look at the trends shaping the future of the industry, there's essentially three trends that I see taking form at the moment. The first is technology commoditization. Second is need for service differentiation. And three is a focus on client experience. If you guys have ever heard Michael Kitz's talk or any other thought leaders in the industry, they've talked about these before, but I always find it useful repeating them. And so when it comes to technology commoditization, the simplest way to look at it is there's been over $210 billion invested into financial services technology in the last 10 years alone. And these dollars have really primarily driven a lot of the change that we're starting to see today. Although a lot of it hasn't directly impacted wealth management by itself, I do believe it's had the following impacts on the industry of financial services as a whole. The first one, that the effect that I've seen, is what I like to refer to as the robo-advisor marketing machine. And what this means is that, unfortunately, due to lack of consumer education, financial advisors, human financial advisors, are really competing against robo-advisors from a messaging standpoint. And what this means is that, even though I know, and I know all of you on this call know, the services you provide are very different, but from a marketing standpoint, these robo-advisors are using a lot of the same messaging that you are. If you just go onto Google, Facebook, I just pulled some of these that I quickly put together in a couple minutes. A lot of the messaging they're using is very similar to what financial advisors have on their websites. And so consumers are confused as to what is the difference. And so we are competing from a marketing standpoint, but not from a service standpoint. The second trend in technology is what I refer to as product commoditization. And there are now more financial products on the market than ever before. And consumers are getting bombarded with new products every single day. And there's more and more companies that are starting up and creating new products. And so as advisors, you can no longer differentiate yourself based on the products you sell to your customers. And the easiest way to visualize this is just look at a market map of the top 250 fintech companies out there. These are companies that are spending billions of dollars targeting consumers and trying to convince them to use their products. And this doesn't include the other 14,000 fintech companies that are out there in the market. This is just the top 250. And so you can imagine what people's social media pages look like, how they're getting advertised to, with all of these companies basically bombarding them constantly. And so when I speak to my community of financial advisors in Hubly, is the biggest effect this has had in the financial advisory space is it's essentially increased cost of customer acquisition, because that educational component is important, because consumers don't really know what the difference is. But I think ultimately the most important effect that technology commoditization has had is it's fundamentally changed clients' expectations. And what I mean by that is clients now have a different expectation from what they expect from financial services. They've experienced what it's like to open up their iPhone, go to the App Store, download an app, and open up an investment account and have their money invested within seconds. And so that process of financial services being almost instant, transparent, and accessible is really driving client expectations. And that, I think, the future of financial planning is going to continue getting pushed in that direction. And so as advisors, we need to challenge ourselves is how can we make our services more simple, more transparent, and more accessible, because that's what consumers expect of the market as a whole. And so that brings me to the second trend when it's the future of the industry, which is need for service differentiation. And basically, due to technology commoditization, the only way advisors can continue to succeed is to really differentiate your services. And so we work with hundreds of advisors, and these are some of the things we've seen them do that I want to share. The first thing is they start referring to themselves as their client's financial quarterback, essentially doing more for your clients at the same cost as before. And this has allowed the humans to really differentiate from the robo-advisor marketing machine and almost act as a household CFO. But what this means, you're now responsible for managing multiple aspects of someone's finances and almost acting as a general practitioner versus a specialized heart surgeon for your clients. And I think McKinsey stated this really well, is that they basically said that in the next 10 years, advisors will gradually shed their role as investment managers and become more like life or integrated wealth coaches. And I really do believe that is where the industry is going. The second need for service differentiation is focusing on a client niche. And I'm sure this is nothing new to any of you, but by being able to focus on a client niche, it's going to help you further differentiate your services. And we've seen some really unique niches in our community of advisors. One of our advisors actually only services online gamers and YouTube streamers. And so he's carved out a really unique client niche because he's very involved in the gaming community. where he's getting customers through very different channels than the average advisor, but he really understands the lifestyle of these online streamers and YouTubers. And he's been able to build a really amazing business out of that. And I think Michael Kitts has put this really well, is differentiation is key to successful marketing, primarily because we have to realize that as financial advisors, you're in a service-based industry. And that experience you provide to your clients is really what's going to distinguish yourself. And the last thing that service differentiation is driving is a need for operational efficiency. Because you're now acting as a quarterback for your clients, you're focusing on niche client, providing a more holistic service to them, you're doing essentially way more work for the same amount of money as before. And so you need to figure out a way to really be operationally efficient in order to deliver this really complex service to your clients. And this is really to combat fee compression and all the other trends that are obviously driving that. And I think, once again, McKinsey stated this well, is in the coming decade, I think what you will see is the number of clients serviced by wealth managers will grow at an unprecedented rate. And so how are you going to service more clients for the same cost as before? And ultimately, advisors will need to find a way to turbocharge your operational excellence. And that brings me to the last trend in the future of the industry, is because there's technology commoditization happening, which is driving a need for service differentiation. Ultimately, we really need to focus on that client experience that we're delivering. And we need to make it as simple and easy for customers to buy our services. And so what we're seeing, and I think what you'll continue to see, is first and foremost what I like to refer to as the digital financial advisor storefront. That was a lot of words, but ultimately it's how can we repackage the services we provide as wealth managers and financial planners to make it really easy for consumers to buy what we're selling. And the reason I say this is because just look at what robo-advisors are doing out there. Once again, from a marketing standpoint, they've done a great job at packaging their services with easy click to buy or click to get started buttons. They have 3 packages. Humans are they need simplicity in order to make a buying decision. And so I think robo-advisors have done this well. For example, Stash, you can be for $1 a month is you can get personalized advice, you can start investing in your portfolio, you get life insurance advice. And so they've really packaged everything so simply for $1 a month. I think another example is Wealthsimple. They've used the AUM model, but essentially done the same thing where they're able to quickly show you what you're going to get for different service packages. And I think this need for simplifying the buying process is really important. And we need to think about that as financial advisors. How can we do that? And we need to keep this top of mind. I interact with hundreds of advisors over the course of a month. And one of my favorite ones I've actually seen is a financial advisor who's really packaged his services the following way. He has his grow, retire, and invest package, where he's really provided clarity in a lot of what you're going to receive as part of those different packages. And so I think this idea of this digital financial advisor storefront simplifying the buying process, essentially it's driving and evolving business models. And so this is why you're seeing the rise of the subscription-based advisor fee, or moving completely to fee-based and continuing to push in that direction. But it's basically the argument as in, if you're no longer just managing someone's assets, does it make sense to charge an AUM fee? And I think there's a quote once again by McKinsey here, which I think summarizes it pretty well. In 2030, up to 80% of new wealth management clients will want to access advice in a Netflix style model. And what that means is it's data-driven, hyper-personalized, continuous, and possibly by subscription. And so this idea of how can we make financial advice as simple and easy to buy as a Netflix account? Probably a crazy dream, but I think working in that direction will help us get closer to meeting those client expectations. And so I think when I try to summarize the fundamental evolution of the industry and the 3 trends that are continuing to drive forward is, once again, technology commoditization, need for service differentiation, and a focus on that client experience. But I think more simply put, how we can focus on that in a day-to-day as financial advisors is how can you make your services more transparent, more consistent, and more customer-centric? And if you and your team really focus on that when you're trying to deliver that experience to your customers, I think this will go a long way. Because I don't think we can just rely on managing someone's assets anymore, or rely on delivering a multi-page bound financial plan that gathers dust somewhere on a shelf. We need to find ways to engage with our clients in a value-added way in order to really stay competitive in the ever-changing industry that we see evolving in front of us. And so with that in mind, I think it's always just good to set this context of where the industry is going before actually diving into the fundamentals of the planning process. But before we do that, I'm going to take a quick pause here, open it up to questions, and also Tatiana is going to just launch the poll as well. And we'd love for everyone to quickly fill out the poll and then open up questions. Feel free to unmute yourself. If you'd rather throw a question in the chat box, Tessa will make sure that question is caught as well. Awesome. We see the first couple of results coming in from the poll. Thank you, everyone. Any questions in the chat, Tessa?
No, there's no questions currently. I think everyone's busy filling in the survey.
Good. Awesome. We'll wait another 30 seconds. We've got a couple people left still on the poll. If not, then we'll close the poll and share the results.
I just got a question in here from Jesse, is wondering, what are you seeing or hearing about evolving your practice from baby boomers to millennials?
It's an awesome question, Jesse. What you're seeing in the industry is a large amount of the wealth management clients are older. They're heading into retirement, if not already deep into retirement. And so a lot of the advisory firms that we work with, where the large majority of their book of business is in that segment and are probably going to pass away over the next 10 years, is a lot of them are trying to focus on what's next for the business. And so what we see happening is that they're really working towards how can they do generational planning for their clients' kids. And so a lot of what they're focused on is how can they improve the service offering to their existing clientele, but not just to the individual client, but to their household. And so we see those household services really increasing so that they can focus on generational planning to the younger clientele. And what that means is, like, because a lot of the younger clientele in the generational space, they don't necessarily have the assets. And so that's why we're seeing evolutions in business model, because a lot of those generational clients, their kids, either they have good jobs and they're doing well, but they haven't actually gotten a wealth of assets yet to manage. And so what you're seeing is either your fee-based only, where it's just charged by the hour planning, or it's the subscription-based model. And so it's like, how can you provide planning and advice to that next generation of clients in a very simple way? And so we see that happening across the board, and what a lot of our community of advisors are focused on. Great question, though.
We have another question here as well, if you have time. It's from Matthew. He said, "Hi, Louis and Tessa. Thanks for the presentation. I agree with all of the points you've made. And I think where financial advisors are stuck right now is in marketing, is how to show the value of a financial life coach without seeming too much like it's a wellness offering, such as a spa or yoga, etc. And I still have the foundation and trust of a bank. What have you seen as to how to balance this?"
It's a brilliant question, Matthew. And to be honest, I'm still figuring that out too. And that's really what we're trying to do at Humbly is to help advisors do exactly what you just said. So I think I'm learning with you on this, but what I've seen is it's really about the advisors that have done it well is, once again, it's that package model that I showed you, where it was the grow, retire, and invest, where they've provided a lot of clarity in the actual tangible things they're going to deliver to the client. Yes, you're going to continue being essentially a financial therapist for your clients. That's a large part of your job. And that's what clients pay you for. But it's what sort of tangible value can you deliver to your clients that's outside of just managing their assets? What are all those other things you're going to take away from them? And so it's this kind of, the model I like to refer to is like your do-it-yourself with guidance. And so a lot of your clients are willing to do a lot of their own financial stuff for them, but they require that accountability coach to actually make sure it's done. And so what we see our community of advisors doing is they're essentially project managers for their clients' finances. And so they're managing different aspects of their clients' finances and actually making sure those things get done on time. Let's say, for example, an estate plan review is you're responsible for actually making sure the client gets that done. And so how can you actually be a project manager for your clients' finances, and what are those actual deliverables you're going to be providing to them throughout the course of the year and the relationship over a 10-year period? Is kind of the mentality we've seen a lot of our advisors take, which seems to be working, where you're able to build that trust, provide that service, still be that therapist, but also provide really tangible value to them. But great question. I'd love to chat offline about that, because I'm still figuring that one out as well, because I think that is the future. If we can nail that, we've really transformed financial advice. Awesome. I'm going to share the results of the poll here with everyone quickly. And so if you look at the results of the poll, what we've observed from the industry as the three biggest challenges that advisors experience is really onboarding new clients, managing those client projects that I just touched on, Matthew. It's how to actually keep your clients accountable and deliver those projects, and then coordinating ongoing reviews. Looks like this audience has nailed ongoing reviews, so I won't touch too much on that in the fundamental process, but I'll share some best knowledge on the new client experience and also managing client projects. Looks like the onboarding process typically takes about a month to 6 weeks for this group of people, which is great. That's actually quite fast from what we've seen across the industry. I'll actually be talking about some strategies to how you can actually change your onboarding process so it's less tedious, less heavy, and actually easier to manage. The third one, how long does it take to implement a financial plan? Looks like the majority of people take 6 to 12 months, which is actually what we recommend, and I'll be talking about that as well. And lastly, as always, we actually see this as a very even split in the industry, is what are people more concerned about, either growing their book or demonstrating value to existing clients. We see both of those being really important for most businesses out there. But with that being said, I'm going to quickly dive into the fundamentals of the planning process. Thank you everyone for filling out the poll there. And so for the fundamentals that I'm going to be covering today, these are really best practices that Humbly has observed over the last 2 years of working with advisors. We've helped over 200 happy customers to date. We're still in the process of growing as a company ourselves, but we've actually helped create over 16,000 workflows for advisors. And it's built up really quick, and it's really exciting to see that. And we've learned a lot because of that. And so basically what Humbly is, for those of you who aren't aware, is Humbly is a workflow tool that's really purpose-built financial advisors and their teams. So we're not a CRM, we actually work hand in hand with the leading CRM. So we integrate directly with Redtail and Wealthbox. And you can think of us as, if you ever use Trello or Asana, but we're really purpose-built for advisors. And the key areas of the business we really help with is we help you essentially scale your client experience while ensuring nothing falls through the cracks. But there's essentially 3 core challenges we've witnessed across the industry. One is advisors struggle to streamline their onboarding process. And the biggest challenge we see is as soon as your firm starts growing and you have multiple people involved in that onboarding process, or you have another advisor delivering that onboarding process, is the consistency really deteriorates and there's a lot that client experience essentially gets diluted. And so we help you put in that structure that's going to allow you to actually streamline that process and make sure it's consistently delivered. The second one is client check-ins. Sounds like this group has no problems with client check-ins, but we found the scheduling, preparation, and follow-up processes are difficult to manage, and especially tracking all of those follow-up items. And lastly is managing client projects. And Matthew, I spoke about this just earlier, but on average, we found advisors are managing 1 to 3 projects per client. And so the average advisor has 80 to 100 clients. And so any given time, you can be managing up to 200 plus projects, from helping clients with an insurance review, opening up a new investment account, whatever it may be, is how can you actually manage these projects and deliver them in a timely manner. And so with that being said, we're going to dive into the fundamentals and some of the best practices we've learned. And I'm hopefully going to share those with all of you today. So the 3 fundamentals I'm going to cover is how to establish strong client planner relationships in the initial stages of the planning process. 2, how to actually communicate and implement those recommendations. And 3 is how to actually monitor and track the results and those deliverables for your clients. So to talk about the first one, which is establishing strong client planner relationships, or at Hubbly, what we more simply refer to as your new client onboarding experience. And there's essentially 3 recommendations we have for advisory firms. First is you need a way to really prospect, qualify your potential prospects for your business. And I'll talk about the best methods to do that in a second. 2 is to approach your discovery process in a needs-based way. And lastly is to actually implement through topic-based implementation. And I'll break down what these mean in a second here. When it gets to prospect qualification, what we found, and I've spoken to hundreds of advisors across the industry, is that most advisors actually don't know what their average client looks like. And so there's actually an activity we recommend that you and your team should conduct is actually take some time to document what does your average client look like today. Look at things like profession, needs, age, kids, lifestyle, etc., and really try to document those. And then ask yourself, is this my ideal client? And if it's not your ideal client, which of your clients are your ideal clients? Because what we found is that about 80% of clients that an advisor manages, they don't actually classify as an ideal client, because they started their business and they basically just worked with anyone because they have a really strong passion for helping people. But this is really starts affecting your business in the long run. And so once you've actually gone through this process and you have an idea of what your ideal client looks like, is you want to have a strong qualification process to actually eliminate people that don't fit into that ideal client archetype. And once you have an idea of the ideal client, we actually recommend asking yourself, what is your new client experience that you're trying to create? And actually take time to map out that experience. And the best way to do this is to put yourself in your client's shoes. Instead of being kind of creating your website, instead go to your website. What's that process of scheduling a call? What's that first email your clients get? What does that initial consultation look like? Really map out that initial client experience and ask yourself, is this the experience I actually want to deliver? Most of the time, we find advisors are actually completely rejigging that experience when they go through this process. Once you've improved how you qualify prospects, is we recommend a needs-based discovery. And what I mean by this is what we found is a lot of the advisors we work with, they really complicate the discovery process for their clients. And you got to know that finance is complicated and clients are intimidated by their finances. That's why they're coming to work with you. And so what we find is that sometimes advisors have a document list of 40 plus items they're trying to gather for a client, when a lot of those things actually aren't important right away. And so we actually recommend implementing what we call minimal viable discovery. Collect as little information as possible about the client to fix their most pressing issue. And whatever clients are coming to with you, there's a really good way to do this. And so one of my favorite examples of this is one of our clients in Seattle. He's built an awesome business working with tech employees. And so he works with people that have complicated RSUs or ESOP plans. And so most of his clients come to him with that immediate problem. And so he initially just fixes helping them with their RSUs or ESOP plans. And then ultimately he ends up managing their assets, doing their tax planning and all the other things. But he really approaches this idea and embodies minimal viable discovery to focus on their most pressing issue for his client niche. And that brings me to the last point is once you've solved their most pressing issue, how do you actually finally get to working on the other 9 out of 10 aspects of their finances? And so what we recommend is what we call topic-based implementation. And so instead of actually trying to do your entire onboarding process in 3 to 4 weeks, which what a lot of people do here, we actually recommend extending that. Do it over a 6 to 9 month process, because the biggest bottleneck to your ability to grow as a firm is your onboarding process. And what we found is that most advisors and their teams really struggle to onboard more than one client at a time. And so you have this really big operational bottleneck as a company because you're trying to shove everything into a short period of time. But instead, if you extend that, you can then have several clients going through your onboarding process, and you do it in a more bite-sized way. And ultimately, you want to make this process simple for your clients. And so that basically brings me to the third point here, which is remove those operational bottlenecks, but how to actually communicate and implement those recommendations through a topic-based way. And this is actually what we refer to at Hubly as your first year client experience. As a lot of you have probably experienced, is that first year with a client is where a lot of the initial work happens, and rightfully so. They're getting started with you. But there's a couple of key recommendations we have in that first year relationship after you've solved their immediate pain point. One is effective prioritization of what's next. 2 is those topic-based meetings. And 3 is actually transitioning your client into what we refer to as maintenance mode. And so when it comes to effective prioritization is ultimately, even if you serve a specific client niche, you need to realize that financial planning is a very personalized process, and it always will be. So how can you earn your clients' trust in the simplest and fastest ways and truly make that experience feel personalized while trying to scale it operationally is one, making sure you focus on a client niche, but 2 is prioritizing the things that come next really well for your clients. And so if you're really able to prioritize what's next is you can break it down into topic-based meetings. And what I mean by this is essentially what we've seen our advisors do is this is actually a screenshot of one of our advisors' hubs. They've basically broken up that financial planning process into 6 to 9 months. And they actually just focus on one topic at a time and do 30-minute meetings over the course of a year, 6 to 9 of them, where they're just focusing on one topic. And so this is a really great way to simplify that initial onboarding process and extend it where it's a lot easier for their customer to consume. And so if you're able to do this well, you can also then really visualize it and see where clients are at in your particular processes and can really prioritize accordingly. After you've gone through, prioritized properly, gone through your first year where you really actually implemented and talked about most of these topics and have an action plan in place for your clients, we recommend transitioning them into what we call maintenance mode. When it comes to maintenance mode is we actually recommend at the end of that first year with a client, take a pause in your relationship and actually go through and do the following 2 things. What you want to do is you really want to set expectations with your client as to what your relationship is going to look like over the next 10 years. And so first and foremost is actually use a personalized service calendar to communicate and set expectations. Once again, go back to Matthew's point is like, what are those tangible things you're going to deliver over the course of each year that you're working with a client? And then secondly is to establish a clear check-in frequency based on the needs and desires of the client. And I think, yes, that sounds a little bit complicated, like how do you do that? But for me, I always go back to a simple analogy. is instead of managing finances, think of how you work with your clients as basically a maintenance schedule for a car. If you've ever owned a car, they basically have every 10,000 kilometers you do this, 25,000 kilometers you do this. How can you apply that same methodology to how you service your clients' finances? That's really going to help you build trust and to really deliver on your long-term relationships with those clients. And that brings me to the third point, is once you've transitioned your clients into maintenance mode, is how do you actually maintain that relationship over an extended period of time? And this is actually a really big challenge we hear across the board is how do you actually communicate long-term value to your clients, establish that check-in frequency, and to keep track of all their unique needs? And so there's basically 3 recommendations we have here. The first is to actually spend time tracking client service needs. And I'll talk about some of the best practices for that. 2 is to actually maintain client service records of what have you delivered to your clients. And then 3 is to actually continuously adjust and review on an annual basis, and then go into the same circular format. And so if you follow this process as a company, you'll really be able to consistently improve your service offering to clients. And so when it comes to tracking client service needs, ultimately the goal is here that you want to deliver a more proactive instead of reactive service to your clients. You don't want any events sneaking up on you, and you want to know which opportunities to provide value to your clients are coming up. And so what we see our advisors do really well is they actually document both all the general service needs that they have for clients, such as doing an insurance review every 2 years, an estate plan review every 3 years, looking at the retirement plan every 5, etc. But then they also have milestone and age-based services that they basically try to provide, where they're looking at things like college planning for their kids, looking at long-term care planning, looking at social security review. What are all those age-based milestones where you can actually provide value and opportunity to engage with your clients? And so what we see our advisors do really well actually in our software is, once again, this is the client view in Hubly, or what we refer to as a client card. And so in the client card, advisors track these 2 important things really well. Is they're tracking those client service needs by what we call a service stream in Hubly, where they visualize what are those different service needs that their client has. And on top of that, they're tracking all those important client dates. What are all those opportunities that I'm going to be proactive in my relationship with my client? And that brings me to the second one here is maintaining client service records. Is ultimately what we recommend is invest time into documenting your processes in your head. It's all too often I hop on a call with an advisor or their team and I ask, how have you guys been managing and tracking your services to clients? And most of them say in their head or on sticky notes. And so if you don't actually invest time and effort into documenting those processes and creating playbooks for them, you're not going to actually know more about your clients' finances than they do. And so I don't recommend Hubly as the only software to do this. There's tons of other options. I've seen advisors do it really well on Excel or Google Sheets. It's not about the software you use, but it's actually about being meticulous and tracking what have you done for a client. And unfortunately, just having notes in the CRM is not good enough. And that brings me to the third point, how to actually review and adjust on a regular basis. If you're properly tracking your client service needs, and if you're actually maintaining clear client service records, ultimately what that's going to allow you to do is to review and adjust on a regular basis. And so what I mean by that, and what our really rockstar advisors are doing, is they're doing the following 2 things on an annual basis. 1, they're reviewing and adjusting for each client's individual needs. So they're actually going back and asking the client, this current personalized service calendar we put together last year, does this still match your needs for the upcoming year? What additional service needs or milestones are upcoming for you? And really taking time to document those. But the second thing and more important thing that it's going to do for your business, if you're doing this for each client, what you're going to start seeing is you're going to start seeing new opportunities to review and adjust your internal business processes to ultimately increase share of wallet. and once again, I'm going to go back to Matthew's comments earlier because it was so good, is this is what banks do really well, is they constantly focus on increasing share of wallet, is they're always trying to sell you another product or another service because they know once you have 4 or 5 services with them, you're actually going to stay with them for life. And so what our Rockstar advisors are doing is because they're reviewing and adjusting for each client's individual needs, they're identifying opportunities across their client book to provide an additional service and to increase share of wallet, which is just making them more valuable to their clients. One of the most common examples of this that we've seen popping up is more and more advisors are doing tax prep, and not actually doing tax prep in-house, but actually outsourcing that to a CPA or some sort of accounting firm and helping clients once again manage that project. And so to recap, the 3 fundamentals is make sure you have an awesome new client experience. You want to make sure that you're building trust in the simplest and fastest way to your clients. 2 is don't try to reduce that operational bottleneck of the onboarding process. And instead of trying to shorten it, extend it. And it's kind of counterintuitive, but it works well because of this high touch service that you're providing. And 3 is invest in new software that's going to allow you to track and maintain client service needs, which is ultimately going to help you increase share of wallet and consistently improve your business. But to quickly recap all the key takeaways from today, if you remember nothing else, remember and leverage that key value of financial planning, your ability to provide human validation. 2 is differentiate yourself from the robo and capitalize on those key trends. Instead of looking at them as a bad thing, is how can you actually meet those client expectations that are changing? And thirdly, once again, invest into your operational efficiency, because that's ultimately what you're going to have to do to succeed in the future, because the number of clients you're going to be managing is going to grow at an unprecedented rate. Feel free to reach out via email. My email is louis@myhubly.com. Even if you're not interested in Hubly, I'm looking to connect with financial advisors that just want to chat or vent about the industry. So feel free to email me. I'd love to hop on a call and we can discuss. And I just want to say thank you so much for having me here today. I'm sure you'll see a lot more of me this year, and looking forward to continue working with your chapter.